Hello and welcome. This is Roy. I'm sharing with you a brief clip taken from a very long video, 75 minutes video that I finished to record for my subscribers. The video is comprehensive and you will see me introducing all the markets that are covered in the long video. There is definitely a lot of volatility ahead of us with problems of the budget, with the problems of the shutdown in America. And I think that this video, the long video, is likely to help you a lot in setting your strategy for the coming week and beyond. You can have access to this video if you give a try to my service. Take a trial of 1 week. It's modestly priced. Check out my website. If you have any questions, don't hesitate to contact me. I hope you enjoyed this clip. Wishing you good trading. Have a good week. Bye now. Hello and welcome. This is Roy. I have many interesting charts in this video, and here's the list. I've got the dollar index, the euro US dollar, British pound US dollar, the euro Japanese yen, British pound Japanese yen, US dollar Japanese yen, Australian dollar US dollar, TYX, TNX, FVX, the euro Buxel, that's the 30-year long bonds of Germany, and then Brent crude, light crude, gold, silver, platinum, the Dow cash, S&P cash, S&P 500 that is, then the S&P 100 cash, the Russell 2000 cash, the FTSE cash and the continuous contract, the Greek composite index, the Chinese securities index, and I'll terminate the video with a look at the Nikkei. So I'll be following his gold. And that's the daily scale. I still like this as an ABC. I treat this as a 1, 2, 3, 4, 5 legs complete right here, and this is a correction to the more than 1 month descent that we have seen. So the correction is going to last for at least another week, at least. Yes, we should be seeing here bouncing up and down between 1350 to under 1300. Completing the correction will prepare it for another plunge. And we could be already looking at an A. It's funny, it's looking like oil. No? Oil did the same thing. That's an A, either ending here or here. That's a B, and shooting back up towards 1350 is not to be trusted. Is not to be trusted as a genuine bullish move, because if this is an ABC, you know what's going to happen. It's going to snare quite a few gold bugs and then come down. And that could be just A. Okay, that'll be A, B, C. When the whole thing is done, look for lower prices. Okay, that's silver. That's the daily scale of silver. Look at the 50 moving average. Terribly important in this chart. Very, very important. Where is it now? It's been under the 50 moving average for almost a month. Fairly weak. Fairly weak. Moreover, it is showing me clear 5 legs down with a 1, 2, 1, 2, 3, 4, 3, 4, 5. This is bearish. Repeat, this is bearish. This is suggesting that silver will hang around here for 2 weeks maybe, but the next big move is likely to be down. I am wrong. The whole thing will turn upside down if it manages to build a base above 23. Do you see? That will be too much strength, will be completely uncharacteristic, will not have a place for the projection that I have here, and it will suggest going higher. But as long as it stays, certainly as long as it stays under the 50 moving average, nothing to worry. This is likely to continue lower. Okay, that's platinum. Platinum has been a star performer in terms of the projections. Blow by blow came right on time here. That's the weekly, and we are still working with the assumption long term, if you remember, that with the weekly here we go back to 2004, that is potentially A. That's a B with an ABCDE terminating here, and we have seen already the first leg down out of that triangle, and we have seen the second wave, and potentially we are now in the third wave down. And of course I also mentioned it could be any other kind of complication here. We do not have guarantee that it's going to be picture a textbook kind of pattern of an ABC. We can't know, but this is a projection that I have that makes sense, and so far it's working. Take a look. This is first break. That's an A. ABC. That's an A. That's a B. 1, 2, 3, 4, 5. That's a C. Second wave in. That's it. Start looking down. Indeed, it's breaking down in style. Now let's go to the daily. We also have we have a cross, I think, on the weekly MACD. Look, 1, 2, 3, 4, 5. 1, 2. Continue down like a clock. 1, 2, 3. And I think it is on its way to continue lower. This is supportive of my bearish case, for example, for China. In China, I'm still bearish on the Chinese market, and this is an industrial metal, and it is going nowhere. It's just looking down. So where's the recovery? This is projecting further hardship, further slowing of the economy. 1, 2, 3, 4, 5, 1, 2, 1, 2, 1, 2, 3, 4, 5, 3, 4, 3. Staying under my orange line here, we are in good. We are looking at a good, well-behaving bear further downside.